listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
All right. Welcome, everyone, to the latest episode of Non-Del Influencers Podcast. I'm Matt Coles, National Sales Manager with First Funding. Today, I have Wade Betz. Wade, I'm being told, you are the head of Correspondent Lending with Mpire Financial Group. How are you today?
It's a good day. Absolutely.
Absolutely a good day. And so first of all, Wade, I'm going to put a little praise at your feet. So take all this graciousness as you see fit. You know, I got into this chair, National Sales Manager with First Funding, about 1.5 years ago now. And I do have to say, I think one of the greatest people I've met since I've been on this side of it has been you. I know, I knew you when you were previous life, when you were a mortgage broker. Coming back and seeing you as the head of correspondent over at Mpire has been phenomenal. And you know how much I enjoy our conversation. So really thank you for your time today.
Thank you. My pleasure. You're good people over there as well. So I'm honored to be here. So
Wade, I know a little bit about you, and I know that you are a diehard LSU fan.
Yes, for sure.
Does it go to all sports? Is it LSU basketball, football? Where's your passion lay?
So my dad played football for LSU. I'm from New Orleans, so I've been going to games there since I was little bitty. So love football, like basketball, and really enjoy baseball. I just don't get home to go see a lot of those anymore. My wife and I both went to SMU for college, and so we're heavily involved in that. So only twice has LSU ever played SMU in sports.
Oh, really?
Just in case you're wondering, I did wear a red shirt, not a purple or gold shirt. Okay, so
oh, wow.
Yeah, exactly.
And now that SMU, SMU is, near our office and near your home. Yeah. Pretty cool that they're in the ACC now. I get to see some really cool activities over there nowadays.
Yeah, and now that we can legally pay players, I mean, we should be pretty good. We've got history of doing this. So
can't be banned anymore, right?
Yeah,
Eric Dickerson is somewhere in the world ruining the day that this happened for sure.
100%.
All right, Wade. So running Mpire Financial Group's correspondent division, I know you have a passion for this segment of the business. Tell me a little bit about what it looked like when you first got started over there to what you're seeing today versus what you want to grow.
So when I first came on board with Mpire, our owner, John Moto Widlack, essentially asked me to start and grow our correspondent lending division. I guess it's okay to say here, like one of the only thing I made him promise me though was that we would never hide margin on the rate sheet if we did that. So He's a stand-up guy. He said absolutely, and we've been off to the races ever since. And y'all were our very first warehouse line. Y'all make it so easy on us. Like the tech piece of this is leaps and bounds ahead of anyone else that we've ever encountered. So kudos to y'all. You make it very easy to do business with. But y'all were our first partner. Yeah, y'all were our first partner. Y'all have been great partners, and we've slowly grown. We didn't go all in on the deep end. We slowly added investors. We're expanding and those types of things. So it's been a journey. Where we're at now is not where we're going to be in 12 months, 24 months, so on and so forth. So I've got some pretty significant growth goals for the platform, and I think it gives us and brokers like us the best of both worlds, where we can do the correspondent side when it makes sense to. And if we have to broker, we just broker it. So there's some hoops to jump through from a licensing perspective, and we can't discount the risk that comes along with correspondent.
Right.
But I feel like I get to have my cake and eat it too. So I'm very blessed to have a company that supports that mission. And I've got some phenomenal teammates that frankly help me look really good because they do a lot of work behind the scenes as well.
I want to come back to the risk side of things. When you're, one of the things that, you wear a lot of crowns over there, right? You're trying to do your own production. You're also doing some recruiting, and you're also running the correspondent division. When you're recruiting, what are some of the hangups that maybe the LOs have about the non-del space? Is it a lack of not knowing exactly what it is? Give me an idea of what you encounter when you're talking that space to your LOs that you're bringing in.
So, to be honest, some brokers get pretty intense about the fact that if you have a warehouse line, you're no longer a broker. And to that, I'll say, who cares? You run your business how you think you need to run it. I'll do my thing. We can both succeed. There's enough business to go out there. But there's some people that get pretty worked up about it, and I just don't get the big hang up. So right. when we are out there having these conversations, I think that the correspondent platform gives us the highest chance to successfully close the loan. Okay. Now, some of the hangups that I hear out there is there's typically, not always, but there's typically some kind of additional cost to the loan officer to close a correspondent loan. And then there's always, for the most part, post-closing funding conditions. Okay. Right. So there's always something afterwards, which does frankly delay payroll by a bit. We're not talking significant, but it's a difference between brokering and correspondent. I mean, there's some definite differences, but at the end of the day, if you can achieve, which is difficult, cost parity between the platforms, there is literally no reason why you would not want to go correspondent, with the only downside at that point being that it takes a little bit extra to get paid.
That's really interesting. That's really interesting. So one of the hangups, or not, one of the discussion points that you probably have is, hey, on wholesale, you get paid at this part of the transaction. Mm-hmm. On non-del, you're going to get paid at this part of the transaction.
Right.
It's about a week. Headwind on it? Do you get headwind on that? Or is it just like, okay, I understand? Or how's it work in your world?
It depends. There are some brokers out there that have everyday payday, and some people absolutely love that. Right. A lot of the people joining the wholesale space are coming from retail. And frankly, plenty of retail pays once a month. So there's lots of loan officers in the country that are used to getting paid 45 and 60 days after they close a transaction.
Right.
The more common structure is twice a month from retail, but still, it's usually not a big deal. It's not a deal.
How did you come into the non-delegated space? Like, what was your evolution into the space?
So when I joined the broker world, I was a 14-year retail person. I joined the broker world and joined Nexa at the time.
This is like 2020, 2021, right?
I'm talking weeks before COVID broke.
Yeah, I think that's when you and I first met. I think we probably met in Irvine, where I wanted to wear a full body medical suit at the AIM event. I think that's where we first crossed paths.
Yeah, and so I got my start in wholesale there, and at the time, Nexa was rolling out their Axon correspondent division, and I was like their second or third branch. And to be very blunt, like I loved it. Like the correspondent arm was absolutely amazing. I was a big fan of that. That division is run by a man named Michael Neal. So shout out, Michael, you're the GOAT. But when I got this opportunity to go to Mpire to start and lead their correspondent division, I frankly couldn't pass that up. So I'm very, very grateful for the road that I took, because it gave me the essential knowledge that I now have to go do the next chapter in my career and in my life. Because at this point, I'm working on legacy for myself and all of the loan officers that work with me.
If there was one lesson learned in that first evolution of you being in the non-delegated space that you could wish you had known, is there anything that sticks out to you?
I think, and this is true for any channel, I think your systems define your success. So what is it? You don't rise to the level of your goals, you fall to your level of your systems. So James Clear said that. So I don't care what channel you're in, but especially in correspondent, where the company has real financial risk on the line. If that loan goes sideways, like you've got to have your I's dotted and your T's crossed. So
Right.
it is very important that you have your system. So it's my favorite acronym is SWEAT. Same way every time.
Right.
And if you do that, you will create a referable experience. And how the loan goes is very important as far as the referability of that client.
So in my role, going from, first, broker to banker, that's what we do a lot of. It's always a conversation about risk. And I'm glad you brought this up, the financial risk that does exist. Without going into too much detail, maybe some high level, how did you solve it? Let's talk about the first loan that went squirrely with you. What did you end up, what did you have to do? And at the end of the day, I know the answer. Was there a solution? If you can just take us through that.
Yeah. So, and I'll leave names out of it, but we had a situation where we closed the loan and the end investor said that they weren't going to buy it, which is like the second to worst thing that could possibly happen. Them saying they're not going to buy it is the second to worst. Them actually not buying it and us having to sell it scratch and dent, that's the worst case scenario. And that's what it looked like we were going to have to go down that path. And I don't know if y'all know this, but like you're making pennies on the dollar if you have to sell a loan scratch and dent. Like you're losing 20, 25, 30+% of the value of the loan. So if you've got I think it was a $360,000 loan, like best case scenario, we were losing like $110,000 on that thing. Yeah. And even though we're a larger brokerage and a larger company, like that matters. I mean, if you really stop and think about that, that's maybe one really key employee from a salary perspective, or maybe 2 support staff that you now can't employ because you've now had to stroke a check via a scratch and dent mechanism. So that was a very difficult time, to be frank. But to set the proper expectations out there, guys, like if you've got significant correspondent growth goals and you're going to do a lot of correspondent business, you're going to crack some eggs making that omelet. Okay. It's inevitable. Talk to some of the biggest correspondent lenders in the country. They all crack eggs during their omelet. So the key is, how do you mitigate the risk and make sure that that happens as infrequently as possible? So it was not a fun week or two. Like it was very troubling. At the end of the day.
One of the things that I really appreciated about you is that when that did come to fruition, I think I may have been one of the first phone calls you made about like, hey, what do we do?
Yeah.
Right.
Well, I had to raise my hand for help. The worst thing that can happen is like y'all find out from the grapevine, like, hey, we've got an unpurchasable loan. Like, I need to raise my hand. Like, Matt, like,
what's going on? I would encourage everyone that's in the non-del space, like, raise your hand first, because quite honestly, your warehouse facility probably knows how to solve the problem way better than you do. We see it more frequently than than a non-del lender could. And we know all the scratch and dent investors. We know maybe some other investors that might be more open to things. I just, what I really appreciated about you is bringing us into that solution as early as you possibly could. Now, fast forward, it did get resolved, and so all ends well in this story. But I just encourage anyone who's listening to this podcast that's thinking about this, and this is the extreme, right? You've closed hundreds, if not thousands, of transactions, and the fact that you have only one story is fantastic and a testament to your good company and your good people over there. But I'm just, the takeaway would be just to make sure that you're bringing in your partners rather than thinking that they'll never find out. Right. So
they're gonna find out.
It's very much like 12th grade for me all over again. Just tell me. My mom and dad would be like, just tell me what you did. Yeah,
the ostrich approach is not going to work. The funny, not funny part about that was this entire time that was going on, the whole time the loan officer was like, so when am I going to get my commission? When am I going to get my commission? It's like, dude, like there is no money to pay you until we sell the loan. Right. So that was the downside, is he had to wait. It was a couple of weeks to get paid on that. But like, I'm just happy that we didn't end up having to stroke a 6-figure check to make that go away. So it worked out well.
Yeah, no, you're good. So you're talking about investors. Again, without naming names, what are you looking for in an investor these days? Because I know you're growing your portfolio of investors a little bit. What are you looking for? What are some of the key things that you're asking them? Hey, do you do this, or what's your policy on this? Give me top 2 or 3 things that you're looking for.
So first of all, we've onboarded them in sprints. So we started with 4 to begin with, and then we've added or in the process of adding like another 8. Okay. But that takes time to just like no joke, guys. Like there's paperwork involved. Obviously, there's due diligence. We have to build out SOPs for all of that. So it takes some time and effort to get in there. So really, some of the things that we're looking for or the questions that we're asking, some of it is, hey, are there different rate sheets for correspondent versus broker? What is the cost? Because in broker, you can click the little button that says underwriting fee priced in rate. On correspondent, we're the lender. So yes, the investor in the back end, they're going to still charge us the underwriting fee, but it's coming out of the purchase advice at the end. So like, what are those numbers? Because at the end of the day, the dollar amount that the company receives is what that purchase advice says.
Right.
And that's where all the payroll calculations and everything come from. So we want to know about their post-closing process. Some of them, they require us to do documents and change of circumstances and whatnot. Others will handle that all for you. There's a couple of moving parts. Most of the most successful correspondent platforms that I've seen, which we're heading to that point, they control the process from start to finish. I'm not saying delegated where they have underwriters. That's next level. I'm talking about mini core where it's non-delegated to where the underwriter of the lender that you're placing the loan with, they're doing all the underwriting, but that doesn't mean that the internal team can't be doing the disclosure desk, lock desk, those types of things. So there is no one way with correspondent. It's a flexible platform that allows you to build your business how you want. But just like everything, it evolves. Like it is how you.
The policies and procedures fall onto your lap rather than the investor's lap. And now one of the things that especially big shops like Mpire Financial Group, right? I would imagine, and no bad ill towards any originator that does this, but sometimes originators tend to chase the best rate that they see that day. Like, hey, we need to go get approved with this wholesale company because they have a great rate. And I would imagine you're probably having to fence them off and say, we can't operate that way in the non-del space. Is that agreeable to you?
Oh my God, I could not agree with that more. The lowest rate on a lender that is a disaster to work with will cost you whatever relationship you're trying to build with your referral partners and clients. Like, guys, like that's a lesson I had to learn the hard way coming from retail. I'm like, oh my God, look at these rates. Look at Loan Sifter. It's unbelievable. Yeah. Well, when they took 120 days to close a refinance, granted it was 2020, but like that cost me some relationships. And so at the end of the day, a competitive rate with a quality partner is leaps and bounds the way to go. So we're not just signing up any lender under the sun as a correspondent relationship. We're not big enough to have 20 plus different correspondent options.
Right.
So that's why we've started with 4. Now we're adding 8. We'll add just a few more, and that's it. Like that's enough coverage for correspondent. Because if you don't like what you see, well then broker it. You can have your cake and eat it too.
I'm going to give you a layup, Wade, because she may be one of my favorite people to work with. Talk to me about the staffing that you need to have, and this idea that if you move into the non-del space, that you need to add 10 different people to your staff. Why don't you take it away? Because she's one of my favorites.
Oh, yes, I love her too. So who he's referring to is the individual that runs our funding department. So I've worked with this individual for over 10 years. She's absolutely amazing. And she was my team captain for a long time. And as we started growing the correspondent division, I was like, I hate to like shoot myself in the foot, but I think you might like this better.
Yeah.
And she's amazing at it, truly amazing at it. So she runs all of our funding. So that's one person. We have another gentleman that helps me with the vendor management side of it and the SOPs and stuff like that. Because let's be honest, guys, all of us have our strengths. All of us have our strengths, and you need to hire around your strengths. So I would be just flat out lying if I'm sitting here like, oh, I did everything. Absolutely not. Like right. they're the offensive line, but we all cover for each other. So like when Natasha's out, JD covers for her, and when JD's out, I cover for him. And then on the ops side of things, I cover for JD, and Natasha covers for me. So it's like kind of like a crisscross. We're holding open office hours every week to answer questions. We get looped into pricing scenarios because the correspondent gives you more flexibility than you have as a broker. So it's amazing. I'm obviously a big fan.
It's pretty amazing because the way I look at it, right? Like you're not a one-person shop.
Oh,
you're a very big loan origination crew. And so this myth that you have to have so many people and you have to add so much salary and staff, you would have probably the same team if you were a one-person shop, even with the size that you are, right? And maybe probably trying to even grow it as you guys are growing the correspondent side of things.
Yeah, we might add one more person to the payroll this year, but probably not. Yeah. I mean, we have to continue to grow. So right. Even though the brokerage as a whole is growing, and I, of course, want to produce to add to that amount, like my focus is on correspondent production. So the vast majority of loans that I close are correspondent, but make no mistake, if I need to broker it, I will absolutely broker it.
Yeah.
You're a broker, spread the loans around to where they deserve to go.
If you, you always have such a positive look at our industry. One of the things I know that you and I got an opportunity, you actually got to do this with the president of First Funding, was get on stage at a recent Housing Wire and talk about the headwinds that you might have to deal with. As we're sitting here today, we just finished probably a very successful March, probably way better than 2024 March, 2025 setting up to be very good. What's the biggest headwind that you see for you and your team as we're heading into the busy buying season?
I think the lack of transactions are concerning. So if you stop and think about the annual forecast that the agencies come out with, and we're talking trillions of dollars.
Right.
But if you actually break it down to like the number of units that equates to, you'll see that it's been declining for a while. I don't have the exact numbers. Don't ask me. I'm not an economist. But the point that was made at that Housing Wire conference was essentially the average loan size is increasing. So it makes it look like the volume is increasing while the unit count is not really going up. And that's kind of crazy to think about because you have more household formations. So there's more demand. And essentially, when rates dip below 6%, I think it's just bananas. So I think that loan officers in particular need to ask themselves, are you built to scale? If your business doubled overnight, could you handle it? Could you bulge to meet that demand? And then frankly, another thing that you might not be thinking of, and this is my personal opinion, is I believe if rates dip below 6 and you start getting your clients that are pre-approved into multiple offer situations again, I think with that NAR settlement, there's a good chance buyers agents don't get their commissions. And then what happens if you wake up in a world one day where buyers agents are far less relevant to your income? Is your business going to survive? So like to your point, Matt, like all of us should be doing a SWOT analysis. So strength, weaknesses, opportunity, threats, and assess the threats and turn them into opportunities. Because guess what? If you're wrong, oh no, now you've just built a more resilient business that is now even healthier than if that event that you were forecasting never came to fruition.
And you when we had dinner last, I think you said you do a SWOT analysis on a monthly basis. Am I right?
Twice a year.
Twice a year.
Not monthly. I'll think about it often. I keep it with me. I've got a little red folder that I keep all my call sheets and business plans and everything, so it's always with me. But it is something to think about. And for you that want the easy button, ask ChatGPT to help walk you through it. Okay.
And then I want to go back to the Housing Wire thing. We're almost up on our time, but I want to go back to the Housing Wire thing because I know you had a really cool moment where I believe you met the #1 producer in the United States, or top 5 or whatever. What was your takeaway from just seeing him and getting to talk to him for a few minutes?
So Shant is who you're referring to. I got to meet him briefly in the green room before we went out on stage with Nate to speak. For one, like, every single person in the industry knows who he is. So I, of course, introduced myself, and he's like, "Oh, I'm Shant." I was like, "Yeah, dude, I know who you are." But what struck me was how humble he was. He was not arrogant, and a lot of people that are at the top of the mountain are very arrogant. And I did not get that vibe at all from him. We had a very nice conversation. His talk during the conference was very inspirational. He's like now the president of Guaranteed Rate now. I mean, it's just kind of like mind blowing. What that tells me, though, to kind of bring it full circle, is that the days of non-producing management are numbered. Because if you think that there's layers of management, that there's enough basis points to go around, like, you're going to see consolidation. There's going to be lots of movement still as we just kind of flush through this part. But Shant's a good dude. I enjoyed my brief interaction with him, and I love to see successful people that put in the effort and that are humble about it. So I'm rooting for him.
Well, Wade, you have a lot of the traits that I saw on stage from him when he spoke. Humble, hardworking, but the biggest one was very systematic in how he does everything that he does, right? It doesn't just happen one day to have this top producing agent. He was very, very defined in what he does and what he follows up on and how he spends his time. And then, like you, knowing your strengths, counterpart, knowing your weaknesses, and what should you move off your desk so that you don't get bogged down in that process. Because if you're not very good at it and it drags you down, that's going to impact your productivity.
Who, not how. It's an important tactic. So it might have to be you if you're a team of one for now. But as you grow and scale, if you want to go fast, go alone. If you want to go far, go with the team. And so you're only as good as your team.
All right, Wade. Well, I can't thank you enough for your time. Continued success to you and your team over at Mpire Financial Group. Big fan of you guys over there. So just, again, thank you for everything. And thanks for taking time out of your day to join us here today on the Non-Del Influencer Podcast.
My pleasure. Thanks for having me.
All right. Sounds good.
Yep.
Thanks for tuning into the Non-Del Influencers Podcast, powered by First Funding. For more resources and episodes, visit non-delinfluencers.com.